Welcome to the strategy stage, everybody. I'm Simon Torrance. I'm an independent advisor specializing in embedded finance, and I'm delighted to be here with Jason Gardner, who is the CEO of Marqeta. Welcome, Jason.
Thank you for having me. I'm excited to be here.
Great. Well, we're lovely to have you here. You are one of the pioneers of this topic of embedded finance. And I wanted to start off, if I could, by asking you, what does it mean to you? What is embedded finance and where does it come from?
Well, we're starting to see a lot of different companies use finance. It could be payments or other types of financial services as a competitive advantage, whether they're trying to disrupt entire industries or they're trying to solve pretty significant problems at scale. And we saw this. I think the first idea of embedded finance, and this has been around for a long time. On one hand, it could be the Target Red Card here in the US, which was the first, they're solving a problem is how do you capture consumer spend before they actually walk through the door, the consumer walking through the door. They do that through the Target Red Card. They're capturing the money in advance. You get 5% off for every transaction. That was, in a competitive situation. Obviously, Target has a lot of different competitors. How do you capture your spend? The next iteration of that, something kind of near and dear to my heart, which is electronic payments, was Uber. So that sort of magical experience of, how do I walk into a car that I've ordered and I step right out and the transaction happens in the background. So I remember when I first started taking Uber, you actually were afraid to walk out of the car because you weren't paying for something as if you would pay for a taxi, pretty much anywhere in the world. So that was very, I would say, uncomfortable for a consumer to do that. But now it's become very, very commonplace. So that was really where it started. But we now see today where companies across the spectrum, small, medium businesses to sort of jumbo enterprise businesses, are using financial services as a competitive advantage. And the change really has been happening over the last decade. And let's see where it's going to head to.
Yeah, and I guess what's happened is that technology has advanced so much that nearly any company can quite easily, or more easily than in the past, embed innovative financial solutions into their proposition, either as a sort of native component, like Uber, or an add-on, at point of sale, or making lending or insurance a lot easier. And I guess just from your point of view, what's really changed in the last few years to make this possible from a technology point of view, would you say?
It's definitely platforms or open APIs, application program interfaces, which is sort of tools and instructions so that engineers can organize these APIs into a specific outcome. And we've seen this. We've seen where technology people, or what was called the IT department at the time, had always been sort of leading from behind. The relegated to the basement, helping them implement was really from a business perspective and packaged software. Either was off the shelf or maybe custom built solutions. Now you're finding where the IT department, or now technology, a CTO, is really leading from the front. So these platforms, APIs have been around for a long time, but really in probably the last 10 to 15 years, they've really allowed companies to go solve very specific solutions. They get access to the metal of technology, and today we're talking about financial services, getting access to these platforms like Marqeta, allowing you to build products that solve, either these significant problems at scale. You're disrupting an entire industry. You're trying to maybe capture spend before it happens. Like last night, I was out to dinner with my family. There was Toast Tab, a QR code on a receipt. Take that code, pay for your dinner, and then walk out the door. We're just finding more and more opportunities to embed different types of financial services. But really it comes down to APIs and the ability to build really solutions from this perspective. It really changed everything.
Yeah, and I guess you saw in other sectors like Twilio, who embedded communications in in experiences, didn't they, 10 years ago? And we're seeing now financial services doing the same, making it really easy for developers to take financial service as an ingredient and to create those great new experiences like you mentioned with the QR code.
Yeah, that's exactly right. Twilio is a great example. In fact, sometimes people refer to us as Twilio for cards. But again, when you had to go build an experience, and we can point back to Uber again, when the car was on its way, you made a payment, it generated an SMS text that gave you sort of the idea that something was going on within the background. To do that in the past, before Twilio, was very, very difficult. You had to figure out how to, kind of fit a round peg into a square hole. Now with Twilio's platform, there's a sandbox. You can go in, sign up for 30 seconds. It's free. Actually begin testing, and then move to production. That really streamlined everything. It was a consumption-based or usage-based service. So every time a text was sent is when you paid. It really just simplified everything and allowed companies to build these services into whether it was their checkout flow, consumer experience, commercial experience. It's been pretty fascinating. Now we see where that's commonplace, but now you see where product people, engineers, business people are trying to build to specific outcomes. And now all of the sort of the picks and shovels or tools are out there to go and do that.
Yeah, and I guess, we've had digitization has been moving pretty fast anyway. And obviously with the COVID crisis, that's been accelerated. And I mean, interesting that comparison with Twilio. I mean, I think when I last looked, they are worth almost, I think, more than Vodafone Group. So they're a company that, is not a telecoms company, but they're enabling other people to use telecoms and communications. And because it's all digital, it's all API based, really easy for developers to use. They have then created an explosion of innovation, which has obviously created a lot of value and demand for their own services. And I guess my contention is that we're seeing more and more of that in the financial service sector as well, which is very exciting, I guess. And I wanted to use that to lead on to Jason telling us a bit more about Marqeta and where you fit in precisely, and how did you come up with the idea for the company? What was the impetus for that?
So Marqeta is a platform so companies can build card products like Visa and MasterCard card products. They can be physical plastic, they can be tokenized to fit into Apple Pay, Google Pay, or Samsung Pay, or they can be virtual. And very much like any open platform that's delivered via APIs or application program interfaces, companies use our technology to solve pretty significant problems at scale, disrupt entire industries, create much better consumer or commercial experiences. And the company got started simply because I just wanted to put a bunch of coupons on a card. This is my third company. I had another payments company before this that we sold to MoneyGram International. And I was there for 2 years. And at the end of those 2 years, I wanted to do something new and was literally, as the story goes, eating sushi in a restaurant. And a friend said, "You're a payment nerd, try to put a bunch of Groupon coupons on a card." And I thought that was a pretty cool idea. And I set out to go do that. And to do that, I had to build something which I really didn't understand or I'd never really heard about, which was this thing called an issuing processing platform. And no one had really built one from scratch in probably a dozen years. We knew we wanted to deliver it via an open platform or APIs, and this is pretty early days of that. And we built it out, and then in 2014 opened up the platform and found that we were a technology and a platform that solved all these problems for companies that we had no idea existed. And when they found us, we really, really took off. We build for builders, which are engineers or technical product managers, visionary entrepreneurs to go to build these products. So for example, Instacart uses us. Before Instacart, the shopping delivery, grocery shopping delivery company, before they would literally hand prepaid cards to their shoppers to go pick up these orders. And they had no way to affect the transaction. So the shoppers could be picking up food for themselves, picking up the wrong orders. There was no checks and balances. So what happens is you place an order on Instacart. I'm the driver. I have a card that's in a terminal state. It's an Instacart card, but powered by Marqeta. I now have someone to pick up Simon's order. So now your order is tied to my card. I drive over to the Safeway. I pick up all of the food. I walk into line, and then I swipe the card. I tap the card. I tap my phone. I insert the card. Any way to sort of initiate a transaction. The point of sale generates a message. It's called an ISO 8583 message. It's the same message that is used when you travel the world. That's why you can use your card pretty much everywhere that Visa or MasterCard is accepted. That message reaches us. We repackage that. We send that to Instacart. So Instacart says, is Jason on shift? Is he hitting the right Safeway? Is he picking up the right order for Simon at the right time, at the right amount? If all of these things equal yes, they authorize the transaction. Transaction comes back to Marqeta. We send that back to the point of sale. And then I take off with your groceries. You get a text that your order's been picked up and it's on its way, or maybe it's an in-app message. That all happens through our platform. We do that millions of times a day across all of our customers. So we found in the beginning is we really started with commerce disruptors. These were companies in the lending space, on-demand delivery, buy now, pay later, that were really sort of technology-led, or technology was sort of the guiding principle for how they built. We then moved into digital banking, large tech companies, and then large financial services companies, because we found our platform really applied to companies of really all sizes that were looking to solve these pretty significant issues at scale. And that's what platforms do. So obviously today we're a public company. We're in our 11th year, and just excited to be in such a great industry.
Yeah, and just give me a sense. I wanted to ask a bit more about some of the other case studies that you've enabled, particularly Square and some of the other companies you work with, because they're particularly, really fascinating. But just give us a sense of how complicated was it for Instacart, for example, to be able to do what you enabled before you were around, and how much friction have you managed to take out of the process?
So we've taken a significant amount of friction out of the process, and the reason being, when an Instacart or a DoorDash or a Postmates or an Uber Eats or others would go to a bank and say, I need a card. I'm going to have these sort of drivers out in the wild picking up orders. I need to be able to affect these orders. And like a bank, they would say, well, we have one product. It's the same product that everybody else uses. We can maybe make some modifications on it, but it's going to take 9 to 18 months to go and do that. And there's a change order process, and all the way that products had been built in the past, specifically payment card products. So try to fit that round peg into a square hole, especially companies that are builder-led or engineering-led, or sort of technology is their North Star. They use that as a competitive advantage to talk to a very sort of analog or binary process. What we did is we just stripped all of that away and gave them access to the metal. So not only did we build this issuing processing system from scratch, we gave them APIs so that they can decide how they wanted to interact with the system, and organize APIs and their technology in a way to solve a very, very specific problem. Companies like Square used us in regards to Cash App. It was at the time just simply P2P. I can send you money, you can send me money. But then how do I spend that money outside of the Square ecosystem? I can move it to my existing bank, and then I can go spend it. But how can I create a much better experience? So say you're in New York, I'm in San Francisco, you lose your wallet, but you have your phone, we're good friends, and you say, hey, Jason, can you send me $100? I can now send you $100. You can generate a Visa card instantly. You can drop it into Apple Pay and pay right at the point of sale. We were the first company to instantly issue a card into Apple Pay, along with Visa, Apple, and Square. It just created a beautiful consumer experience. So it's that magic of being able to receive money and pay for it right at the point of sale. So that was the first iteration of doing that. And if we look at companies like Affirm or Klarna or Afterpay or Sezzle in the buy now, pay later space, how do I scale my business being able to connect my service. So if I'm paying with a firm to the point of sale, and make it seamless. That's where Marqeta comes in. How do I create the same process in the offline world? So I can pay with a firm, but in in store, we provide that service as well. So you can think about all the different flavors of different companies out there that need to go solve these problems, and that's basically what Marqeta does. Is this sort of embedded finance or embedded solutions from the card issuing world?
And then just help talk a bit about then the potential proposition for brands who may, retailers, telcos, utilities, manufacturers who may want to offer a card or a payment mechanism to their customers. Can you just tell us a bit about that and the value of that to traditional brands who in the past have not played in this space?
Yeah, so I think this is the heart of embedded finance. This is what companies are realizing. I think they're realizing, number one, is that they know their constituency. They probably know their constituency better than most companies because those people are walking through the door, they're creating profiles on them. There's significant amounts of data in regards to what that individual is doing in store or online. So they've created a profile in regards to who this person is. They're finding that this person, from a finance or financial services perspective, has a number of relationships outside of their specific business. However, they know a lot about this individual. They're creating sort of anonymized profiles around them. So now they're finding that they can actually introduce financial services. Financial services is a pretty unique loyalty. So businesses, when they get their first bank account, when they get starting, they hold on to that bank account for an average of 17 years. That is very, very unique. So you look at consumers, it's also about 17 years, if not more. So right away, you've captured that spend. This goes back to the Target red card. Capturing spend before that spend walks through the door. You're creating targeted profiles in regards to where these individuals are living and working and playing, and maybe you're introducing food or coupons or better engagement. That's where we're seeing this in embedded finance. Second is the technology is so much better. So now companies are deciding how to use that technology to create these specific outcomes and specific engagements. And three, now we're really beginning to see companies moving beyond just the kind of the branded credit card. They're really moving into financial services and specifically creating a very interesting arrangement, relationship, organization that could be separate from their business, or maybe it's embedded with their business just to engage this. So I think we're very much in the early innings of all of this, but it's pretty fascinating in regards to what's happening.
Yeah, and do you think? How do you feel that a brand can compete with or coexist, perhaps is a better way, with the consumers' cards they already have? So if I have a MasterCard and a Visa and so on, and then a brand that I like and use a lot offers me something new, what's needed to make that attractive and compelling to me, do you think?
Well, it's got to provide a service or a hook or a benefit in regards to that brand. So, Uber is created banking for their drivers. We see lots and lots of other brands beginning to do this. We see Verizon doing this in regards to their users. We've seen Grab do this throughout Southeast Asia. There's lots and lots of different examples around the world. And you also see where Square Cash has set up banking services. Chime has set up banking services. N26 has set up banking services. So you see these brands where we're really sort of taking on traditional financial services, which is interesting. Here in the US, you have over 5,000 banks. A consumer has just a myriad of untold choices in regards to who they want to bank with, but still these new solutions are growing significant constituencies. So we know the opportunity is there. We know that consumers are looking for other options in regards to their, say, financial services life. And it really is taking the brand to understand, using the data that they already have, in regards to what they want to build with that consumer type of relationship or business. They both exist.
And what's your view about when real open banking comes to the US? Does that change the game again? So you've got the brand's data, you've then got potentially, even more data about the consumer to be able to create another round of innovation. What's your thoughts on that?
Yeah, I mean, first, it's going to be probably some time before open banking comes here. We know it's going to come at some point, either legislatively or otherwise. We're seeing it happen in other parts of the world, especially in Europe. It's going to give the consumers a lot of choice, certainly better control over their own data. And then that portability of the data makes it pretty easy to move from one sort of banking institution to another. And then you're right. So marrying that data together, I think brands will have a great opportunity to understand a better sort of 360 view of who is walking through their door every day and what they can create for them. It'll create a unique opportunity, but it's not like that unique opportunity doesn't exist today, because it does. It'll make it easier for the consumer to have one or a number of relationships with, say, financial services, depending, it could be an institution or it could be a brand. But ultimately, they have better control over their data, and they can make decisions on what type of relationship they want to have. That doesn't exist today. So I have a number, as you can imagine, as someone who loves financial services, I have a company that other companies can build card products on. I have all types of different cards in my wallet, in my Apple Pay, in my Google Pay. I mess around with lots of different things, and you're just beginning to see the innovation really happening at the speed of light, where these companies are really using data to target me in regards to the things that I want to do. So it's a bit like magic, going back to the Uber example.
Yeah, well, I want to talk about the future, if I could, for a bit, and then I'll come on to later on what you think the key actions that different players in this market need to take advantage of it. But if we just think about the future for a bit, you've so far, as you say, you've supported a lot of the really cutting edge fintech companies or the tech companies, the tech platforms like Uber and DoorDash. What do you think is going to happen? Do you think the traditional companies are going to start entering the embedded finance game? Are you hearing this? Are you getting more and more approaches from those types of less tech companies? And you mentioned Walmart before. You tell us a bit about where you see the future going.
It's not that I see them interacting with me per se. It's all over the news. I mean, Walmart, great example, hiring two of the leaders in regards to, a 153-year-old bank in Goldman Sachs, completely rethinking financial services, building, checking. We power the debit card as part of the Marqeta by Goldman Sachs. Walmart recruiting away two of the people who actually built that to go build something very similar over at Walmart. Again, we're in the very early innings of this, but this is where the world is moving. The large brands have a real opportunity to capture more of the spend before it walks through the door, in regards to their constituency. And it's interesting. I mean, if you look at Walmart, typically this was J-hooks, whether it was, wanting to get a Green Dot card off a J-hook, or a MoneyGram prepaid card off a J-hook, or send money through MoneyGram or other services through Walmart. Walmart is now figuring they're this sort of lifestyle brand. Now they can add a number of different things to capture that spend. I mean, and that is an extreme in one example, because Walmart is such a global brand. I mean, everyone knows who Walmart is. But there's just opportunities to get more financial services, all the way down to small and medium businesses. I mean, we see it today on platforms like Shopify. Just really beginning to engage with the consumer in regards to how they pay, and downloading an app so you can pay in advance and see better engagement for the brands you're working with. There's just a myriad of opportunities out there today, but again, as I said, we're in the very early innings, because we haven't seen brands like Walmart really roll out their full suite of financial services in regards to what they're going to do.
Yeah, and people sometimes talk about the notion that any company can become a fintech, but it's less about that, but it's more about how they can add more value to their customers by embedding financial services and creating better experiences and greater engagement levels and so on. And I just suppose thinking about the services that then will move on from payments are a really key wedge, as you mentioned earlier on. What do you think are the natural extensions to that as we develop in this market?
So the natural extension is into apps. Definitely, I'm sure there's a bunch of eye rolls in the audience right now. The mobile phone, the apps, and how we're just seeing in financial services being embedded in those, the ability to, generate a card and drop it into Apple Pay at the point of sale. We're seeing, buy now, pay later is becoming pervasive. I mean, it's everywhere. And 4 years ago, we didn't even know the acronym BNPL. Really started in Europe. The company Klarna is a customer of Marqeta. Really brought it to the masses. We now see there's approximately 30 companies globally in the buy now, pay later space. We just saw a couple of weeks ago Square buying Afterpay. Afterpay is also a customer that uses our technology to solve these issues at the point of sale. So it's interesting. We're starting to see now consolidation. This is sort of the fourth wave of companies realizing that going out and building these two-sided businesses or even three-sided businesses is actually pretty difficult, in versus starting from scratch. And these companies realizing like just the myriad of opportunities out there to embed financial services is many. How do they do it? If you're not a developer-led organization or you don't, know exactly where to go, there's lots of use cases out there. There's probably consultants out there where you see this whole cottage industry being built in regards to embedding financial services. And it's going to become an important part of how brands compete in the future.
Yeah, I mean, there's one retailer where I am in the UK that's announced recently that its plan is to make 30% of its profits from non-retail business, and the majority of that is financial services. I think Walmart's at about 10% of its profit is from financial services, but clearly sees an opportunity to grow beyond that as well. If I could ask you then, in terms of if we think about the different constituents in this market, you've got the incumbent. Let's cover the incumbents if we could. The banks, maybe the insurance companies as well. You've got the traditional brands. You've got the tech platforms as well. What do you think the key thing that those different constituents need to do next to really take advantage of this of embedded finance?
Have a strategy. Understand what you want to do. So start from scratch. Sit in front of a whiteboard in regards to understanding your constituency. Breaking down that constituency. I mean, there's all types and flavors of consumers. There's all types and flavors of businesses. Beginning them to break them down and not boiling the ocean. You want to create for everybody. Just simply focus on a constituency. What's cool about what's been happening in financial services, definitely over the last decade, is there are tons and tons of startups, and the reason being is you have lots and lots of venture capital around the world. Flowing into, if cities and towns, countries, continents, from Africa to South America to Asia to the US to Europe. It's really fascinating to see just the amount of sort of capital flowing into these businesses that are being built by entrepreneurs. So now you're not finding the one size fits all company. You're actually finding companies that are building for your either specific constituency, specific business, and your specific part of the world. And there's tons of options out there. I think it can be kind of mind-blowing in regards to where do you start. You got to start with a strategy, with your vision. You need to have product vision in regards to where you want to go with this, how you want to engage, and you've got to have a plan. It's got to be communicated throughout the organization, the plans and where you're going to head. Otherwise, like any project, it will fail. It's not something that you want to enter into unless you really understand what you're getting yourself into. I mean, obviously, financial services is highly regulated because you see the data of your constituents, live, work, and play. There's lots of rules and regulations, federal or otherwise, that focuses on not only the portability of that data, but PII, personally identifiable information. It is not something you just simply want to, go full steam ahead with. You have to be very thoughtful in regards to how you move forward, and getting the support and help from people who have done this before is, I think mission critical.
Yeah, and I guess in the past, some big brands, created their own bank, or they created their own insurance company, and they took on a lot of risk burden there, a lot of compliance risk as well. And I think what we're seeing now is that can all be outsourced to other people like yourself and others. You don't have to take on that burden to be able to make available innovative financial solutions or embed them into your own propositions. And that's a huge shift, isn't it, that's happened in the last few years.
Well, if you look at Marqeta, so we're an open platform for companies that want to build card products. They can be Visa and MasterCard, they can be physical plastic or tokenized to fit in the mobile wallets or virtual. And we have a number of different use cases that companies can go to figure out what to go and build. However, you really need to understand what you want to do in regards to your strategy, and then have a plan to go and build. So like any good open API platform, you can sign up for a sandbox, and you don't have to have a contractual relationship with us per se. You can go and basically build and test pretty much whatever you want. So those are the opportunities out there today where you're not wedded to a specific platform or product. You really have the opportunity to work with a number of different platforms, bringing them together to solve a very, very specific use case. And that didn't exist, a dozen years ago. So now there's lots of opportunities to go and do that, to decide what outcome you want in regards to your product or service.
Yeah, that's the exciting thing, that often people think, oh my God, this sounds like a huge IT project. But now, through platforms like yours and others, anybody can test, learn, iterate at very low cost, very quickly, and actually launch things in the market quickly and test it with the market without having to make huge investment commitments.
Well, you need engineering people, you need product people to sort of build out this, but you could outsource that if you needed to, and you didn't have the sort of large IT department internally. But there's tons of resources out there right now. This has become a cottage industry in regards to embedded finance, and what you want to do and how you want to engage, and the number of different companies out there to sort of help you along with the process. But you got to start with a plan. Otherwise, you're going to be solving for an outcome that you haven't fully realized. And then obviously once it's up and running, and then you have the issue of scale. How do I scale this thing into a real business?
So just my last question for you, if I could, Jason, what's the most exciting thing that you're seeing coming over the horizon in the embedded finance space, in any aspect of it that's interesting to you?
For me, it's just the large brands. Seeing companies like Walmart. We've seen companies like Costco. Kind of dipping their toe in the water. Goldman Sachs. Rethinking. A 153-year-old bank rethinking consumer services. Companies like Cash App. Not only building out a bank per se, but now adding buy now, pay later through their acquisition of Afterpay. It's been really, really neat to see where not only the large financial institutions like JP Morgan Chase, which is a Marqeta customer, using tokenization as a service to create a much better consumer experience. And I think that's what's going to win in the end, is ultimately who has the best experience, whether it be commercial or consumer, where the consumer feels like it's magic. It's just really simple to have a relationship with this specific brand. And this is something that is a part of their sort of everyday spend. We're seeing that today where really good consumer experiences are winning. That's where we see, consumers leaving your typical financial services company and moving to another brand like a Cash App or a Chime or an N26 or others. But again, we're in the early innings of this, and we know the large financial institutions are concerned in regards to that disruption, but it's really the consumer experience and the focus on that, which is really going to drive the disruption here and is going to name the winners.
And I think there's a massive financial inclusion aspect to this as well, because those, I guess, who are closest to their customers, know what they want. If they can combine their own data with other forms of data to engage people who just can't get access to appropriate financial services, that's a big societal benefit as well.
Yeah, we've seen a great example is we now see new financial institutions or even existing financial institutions dropping overdraft fees, which affects the people that can least afford it. So now we're finding where that's a better consumer experience. It's actually the right thing to do in regards to not only financial inclusion, but actually treating people with dignity. People who can't afford to have overdraft fees because in some way, shape, or form, they're living paycheck to paycheck, and they need to make better, more informed decisions. Now, moving away from overdraft fees, where they're not so expensive that they're just digging yourself out of a hole over time. And we see new brands that are introducing this. That's just a better consumer experience, not only in the sort of context of financial inclusion, but really looking at different segments of consumers and what they need to not only to live and be able to afford the things that they need to afford, but also living with dignity, where they're not, being nickeled and dimed in fees in regards to how they live their lives. It adversely affects the wrong constituency. And I just love seeing what companies are doing to just create a better experience for people.
Wonderful. Well, that's a really good note to end on, Jason. So thank you very much for all your thoughts today. Really enjoyed chatting to you. And I should just say to everybody, please stay on the strategy stage. There's more great discussions like this, but I don't think we can. I normally would say a round of applause to Jason, and then you get a lot of energy from the audience, but we can't do that online. But thank you very much anyway for your great contribution. It was a really pleasure talking to you.
Thank you, Simon. Thank you for having me. I really, really enjoyed myself. Thank you.
Pleasure.